Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 3 best stocks to buy right now. And one of these stocks could literally surge by 140%. All of the stocks on this list have been approved by Wall Street professionals. We're talking about 4 and 5-star analysts that rank in the top 2% of Wall Street professionals, so clearly these people know what they're doing. In this video, we're going to particularly be highlighting companies that have been approved by Citi analysts. And the 3 companies we're going to be talking about are already surging right now. They are all in the green. But with that being said, the average price targets for this company are far more than 40% worth of upside over the next 12 months, which is very aggressive. But honestly, we're going to look at the higher end price targets of these companies, and that's why these companies could surge a lot higher than what these analysts are saying. So without further ado, go ahead and remember to smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. The first stock we're going to talk about is ticker symbol CWH, and this company is named Camping World Holdings, which I've talked about in a previous video. Camping World Holdings is one of the largest companies in the outdoor recreation niche. Camping World has a very wide range of products, which would include recreational vehicles, RV rentals, RV accessories for both inside and outside. They also have boats, other types of watercrafts, portable generators, and many different types of equipment and accessories that would go along with camping. The company is actually a holding firm which operates through 2 main brands, which would be their Camping World brand as well as their Good Sam brand. And through these subsidiaries, Camping World Holdings has become one of the largest, if not the largest, U.S. leisure RV dealers, and they are a leader in related outdoor and camping products. So that's a little background on what this company does, but now let's take a deep dive into their financials. Recently, CWH reported a record level of sales in regards to their vehicle units during the second quarter of 2023. However, the company's top-of-the-line revenue came in at $1.9 billion, which actually means this company's revenue fell by 13% year over year, and they missed forecasts by around $70 million. And on the bottom line, the company had a non-GAAP EPS, also known as earnings per share, of 73 cents per share, which missed expectations by 3 cents per share. Now, on the positive end, this company does offer a regular dividend of 50 cents per share per year on an annual basis, given that they have a 2.3% yield. Now, despite the company missing revenue and earnings per share estimates, why is this company even on this list? Well, after the company missed on their estimates, the share price dropped by around 31%, which gives investors a phenomenal buying opportunity. According to a 5-star Citi analyst, he says that this reduction in their share price gives investors a fantastic opportunity to buy in. And he says, and I quote, "CWH is our top pick in the RV space, and we believe it is the best way to play in RV industry recovery whenever it arrives. As the company has a long-term macro-independent market share story driven by merger and acquisition and scale in a fragmented industry, the RV industry is showing initial signs of stabilization and recovery that we believe will begin to play out over the course of 2024 and beyond. We expect price/margin to remain under pressure for RV manufacturers in 2024, which could help spur demand for RV dealers. Meanwhile, shares have sold off recently, providing what we believe is an attractive entry point from a valuation perspective." End quote. So this is a very bullish stance from this 5-star analyst who gives the CWH stock a buy rating and a $32 price target, implying approximately 48% upside from their current share price of $21.55. But that's not all. Out of the 9 analysts that are covering the stock, 8 of them say to buy the company and 1 says to hold this company, giving us a strong buy consensus rating for this overall stock. To where even the average price target, which comes in at $34.57 compared to their current share price of $21.55, this actually suggests 60% upside potential. And if you look at the type of analysts who are reviewing this stock, you can see that these are 4 and 5 star analysts, so these overall ratings should be very accurate over the next 12 months. But this is not even close to the best company on this list. Next, let's talk about ticker symbol SQM, which represents a Chilean mining firm with a powerful presence over in the lithium industry. And if you know me, I love electric vehicle stocks, and lithium is in high demand for electric vehicle manufacturers. So this stock should receive loads of revenue. And the best part about this Chilean mining company is that they are the world's single largest producer of lithium. And they also have various other products that they obtain for the chemical industry, where it produces things like iodine and potassium, which are used in plant fertilizers and industrial chemicals. If you didn't know, this year the company entered into various agreements with Ford Motor Company and LG Energy Solutions for a long-term supply of lithium. Like we said, Ford is making electric vehicles, so they need lithium. And one of the best places to get lithium is from the world's single largest producer of lithium, which is this company. During the second quarter, the top-of-the-line revenue came in at $2.05 billion, representing a decrease of 21% year over year, missing estimates by $74.5 million. On the earnings front, they brought in earnings per share of $2.03, which was 61 cents below expectations. Again, they did not bring in very impressive revenue or earnings per share, but just like the previous stock we talked about, these less than impressive financial results caused the company to decline by around 21% so far this year. But this decline did not stop a Citigroup analyst, which sees further upside potential in the stock, and they believe that right now is a good buying opportunity considering the discount that this company is trading at. The Citi analyst says, and I quote, "Taking into account that SQM has been an underperformer in the local market and current valuations seem to be on the bottom, we believe the share discount to be excessive." And then they go on to list multiple reasons why they believe this company has been oversold. Overall, this company has a moderate buy consensus from the analysts that are reviewing the stock. However, some analysts believe this company could surge from $59 up to $100 per share over the next 12 months, leading to a very good growth runway potential for investors. But now we get to talk about the company and stock that this video was made about, and that is Sunrun Inc., ticker symbol RUN. The company has already surged 10% just today alone, and they are a leader in the residential solar-powered installation space. Sunrun is a well-known provider in the home solar niche. Plus, they also design, build, and install package solar deals from made-to-order installations for single-family homes. In addition to that, they also offer financing services. And if you've seen houses with solar panels on their roofs, it is very likely that they came from Sunrun Inc. Sunrun bills itself as the #1 company in the United States in the US residential solar-powered market, with over 800,000 customers across 22 states plus Puerto Rico, and they brought in $1.1 billion worth of annual recurring revenue. In the second quarter of 2023, they reported an increase by only 1% for their overall revenue, which equates to $590.2 million. However, the company has achieved various milestones which are very impressive. And one of the most prominent milestones that they achieved was posting a net profit of 25 cents per diluted share in quarter 2, thus surpassing the expected net loss of 64 cents per share. So they absolutely obliterated that, and that's why a Citi analyst sees this stock going much higher in the future. And just listen to what analysts say about this stock. Out of 17 analysts, 14 of them say to buy this company and 3 of them say to hold this company, meaning that this company has a strong consensus rating among professionals. And if we consider the current share price of $14.16 and the average analyst price target of $34, this would imply 140% upside for this stock. But it gets even better, because when we look at a 5-star analyst from Oppenheimer, he actually has a buy rating and a $46 price target on this company, representing a 224.86% upside potential over the next 12 months. So if you want to obtain 224% upside potential for this stock over the next 12 months, then feel free to look further into Sunrun, ticker symbol RUN, but always make sure to do your own research to determine if this company is good for your personal portfolio. With that being said, I would love to hear your thoughts down below. Go ahead and annihilate that like button right now for more videos just like this one. Subscribe if you are new, and I will see you in the next YT video.